Well, the Union Cabinet has approved the promulgation of an ordinance to amend the Banking Regulation Act. Now, this will prepare ground to take tough action against chronic bank loan defaulters. The ordinance, which will receive presidential nod soon, is likely to allow the Reserve Bank of India to deal with bad loans on a case-to-case basis. The new law may also empower banks to force corporate loan defaulters to forego ownership and voting rights in their companies. This will allow lenders to induct new management leadership mandated to turn around these entities within a stipulated time. The new rules will also allow banks to separate the outstanding unpaid debt into sustainable and unsustainable parts in a bid to better restructure loans. Ring-fence bankers from scrutiny from investigating agencies is also on the radar. Bankers say that this often restricts lenders from going after chronic defaulters. The details of the ordinance will be announced after the President has given his approval. The ordinance will empower the RBI to take steps to tackle bad loans, including setting up an oversight committee. That's the big exclusive that we broke just a short while ago, and Latha Venkatesh, who broke the story, is here with details. Latha, we've been discussing this since yesterday. What are your sources telling you? What are the likely details of the fine print that we have so far?
Okay. Well, much of this has been swirling in the air, so I'm just putting it all together. This is the sequence of events that we expect in the next 24 hours. Sometime the ordinance will be promulgated. The ordinance will not say anything except that it is empowering the RBI to resolve, to do whatever it takes to resolve the NPLs. Then one expects a circular from the Reserve Bank and probably even a press conference along with it. But that could take a week, where it will detail the change or the combination of all the existing schemes, everything that is already allowed, like changing the ownership, having new promoters, or demarcating the debt between sustainable, unsustainable. All these schemes could be rolled into one, and there could be a tweaking and maybe even easing of some provisions. One thing is certain, the RBI will not let up on provisioning. They will require that provisioning is done adequately, but otherwise they could give more tools and more elbow room to the bankers. But much more important, it will definitely set up oversight committee or committees which will have the jurisdiction to pronounce upon all the resolutions that happen. The next step will be the Reserve Bank in that circular will also say that the top 40 or 50 loans will have to be resolved within some date, most likely December 31. And if not, full provisioning will have to be done by the banks, and the loans should compulsorily be sent to the insolvency courts. Something on those lines in terms of a penal and a finality and a deadline is likely to be announced as part of the circular. That will be the first batch of NPLs. In subsequent months, the Reserve Bank will tweak these rules and then give the second set of loans that will have to be tackled. So in a serial fashion, it appears that in course of time, certainly not within 1 year, but a substantial portion would be tackled maybe within the next 12 months. And all these, of course, will be passed through the oversight committee. The expectation is that because the ordinance is promulgated, RBI is setting up the oversight committee, the bankers should feel that there are enough layers above them, the oversight committee, the RBI, the government, to give them some kind of immunity or protection from investigative agencies.